Hi everyone. Today is Wednesday, February the 26th, and this is the Moneyball Morning Report from the Benzinga Pro platform. Today we are going to have our charts in Thinkorswim because there's something a little wonky going on with TrendSpider this morning. Not sure what's going on with their servers, but we got it. Here we go. So, big thing to think about is we are under the 50. And I'm going to make this sort of thicker so we can keep our eyeballs on it. Okay, so here's our 50. What we've done in times past is really either we spend a couple of days under, big wick down and bounce, a couple of days under, 3 days actually here, pretty good size wick and bounce, and then few days under, so we had 3 days under the 50 here, 3 days under the 50 here before it began the bounce, and then no days closing under the bounce, under the 50 until February 21st. Options expiry, one of the biggest expiries around. What do we have this morning? We have positive open interest. So let's take a peek. Let's draw Fibonacci and see what we need to do. First things first. Support ledges still holding in the buy the dip, right? We have a Keltner channel that is flat underneath and trending down from above. The Keltner moving average is a little bit down, okay? So, big line in the sand for the traders to get up and over is that 6,650. But let's do a Fibonacci on yesterday's price action to see where our go, no-go lines are. So 50% retrace. Take a look at this. Yesterday's candlestick retraced more than 50% of its move. It's pretty bullish, right? Pretty bullish. We dipped down underneath the open, underneath the close of the prior day, and then began to bounce almost immediately in the pre-market. When you see open interest in the ES from the CME site, you know that they're going to try and bounce. And they did try to do it yesterday. They bounced into the prior day's close and a little bit above, but they couldn't get there. So, is this one of those times where we spend 3 days under here and then we bounce and move up above the 50? I don't think that's unlikely. This is a very big number, a very big moving average that a lot of traders look at. So there's going to be a pervasive bid. And if there's not, that's a bad signal. All right. So here is the first trading day of 2025. We opened here at 59.50 and we closed at 59.19. Look at where this fade came into. Almost right into the close of the year. Pretty important. Chances are they're going to try and hold that close. Super important. Put that number down on your list. 59.20. If it loses it, we are very likely to head to the bottom of the box, which is 58.74. Right? So about 50 more ES points to the downside. We are grinding higher, right? And so the dip action event is fairly bullish, right? Look at the grind. Nobody's excited. These are not excited candlesticks. These are, let me see how well I can do it. Now here's the 50 on the hourly. There is some resistance at 6,006, but remember, where they're trying to get up to is this area at 60.40, right? They really are trying to recover that zone, probably actually a little bit lower than that. I would say 60.30. That's what they're trying for. So you don't have to chase this chart out. Wait for the fade, right? How does that look? Listen, when you got candlesticks like this that are doing a fair bit of retracement, look 2 candles to the left and say, all right, if it comes in here, I'm going to buy it, and my stop is going to be just under the close or the low. So it gives me literally 4 points of risk and knowing that I'm headed to the top here. All right? For me, I like waiting to the volume point of control. That's just me. All right? So as long as we hold this region, shucks, let's see where it is. As long as we hold this opening range event, we're going to be in good shape. Notice, last thing before we move on, this is the 6 p.m. candlestick, right? So, no, sorry. Where's my 6 p.m. candlestick? Here's my 6 p.m. candlestick, sorry. This area, as long as we stay above the high of that zone, we're going to have an easy shot of buying the dip. Above the opening range, it's going to be in great shape. So wait for the pullback. Wait for the pullback. See if it holds here. You're going to have time. Markets, they're very chill. If they don't hold, stay out of the way because 59.69 could be next. We could go in any direction, folks. Absolutely any direction. What I do know is the majority of traders are trying to buy, and how well they hold the formation is going to see how much money they put to work, right? All right, here we go. Let's delete all the drawings. Oh, I hope I don't sneeze. Oh dear, here it comes. All right, here we go. This one, right at the 50. So you could say it closed at the 50, bounced, and then lost it. So that's 2 days, essentially. It depends on where you see it plotted. I have another app that plotted this one below. So here we have a couple of them. They're down. Look what happened yesterday. 21,440 is a really big number. We could barely stick our heads above there. And we fell down. Look to the left. Heavy congestion. That's where your buy zone is going to sit. You might say that's 20,943. You might say, Anne-Marie, how? Of course I can see it in the past. How do I know that it's going to hold in the present? Nobody knows. What you do is you position yourself so that if you're wrong, you've managed your risk. That's the only thing we can do. We have no idea whether it's going to hold. I don't know what that squeaky voice was all about right there, but you'll forgive me, I hope. Okay, so here we go. I do expect upside pressure. This 21,216 zone, take a look over here. See the close of the first day of the year? 21,180. Right? 21,180. So, we failed it yesterday. We bounced and almost closed right on it. And then the next day, which is today, we've come in, pulled back, and we're holding the low. It's probably pretty important for a trader to go, wow, I better hold the opening tick of the year, or the year's flat. How can we do that? All right, next line in the sand, this 21,385 to 21,450. If we get up over here, we should get ourselves into 21,690, right? I think that's what we go after. Hourly chart. Wow, it feels weird doing this setup here. Hourly chart, you can see I'm buying the dip. There's the 50 on the hourly. Here is value area low, and they're above it. Now, take a look. We've got momentum up. We've got trend up. Where's it going to? It's going here. What's the hourly opening bar? Tell us. 21,260. And our 50% range is 21,216. So that's our go, no-go line, right? Somewhere in this zone, 21,260 to 21,100. So the dips are clearly buying zones, but we could come to the base of the range. What is trend on the hourly? This is a reversion to the mean trade, right? We moved very far away outside of the Keltner band and then began to break out. Notice what happens. I fail to hold lower. I bounce into resistance. I pull back and I make a higher low. That takes 6.5 hours, right? Do you have the patience for that? Maybe, maybe not. But good trading takes patience. There's no doubt about it. It takes patience. So if you're looking for a long here, wait for it to come back into heavy congestion. You see the size of these candlesticks? Traders are not super excited about anything. They're waiting for something to break. And I think we've got existing home sales or something. I don't know what's going on. You know, news is so arbitrary. All right, let's go to the YM. Let's do the daily. All right, let's delete the drawing sets. And let's take a look at that. You know, we've talked about this double top in the YM, right? It's been one of those things where we said, all right, we can see this got some kind of topping formation here. And then we had a bazillion days down. So what are we doing? Well, let's take a look at what happened the last couple of times this hit the 50. One down day, one up day, one down day, one up day. Fails to close lower, bounces into resistance, but no fade to hold the bounce. So you might say, oh man, I missed it. That's where you can follow along after the recent resistance, right? Once it moves over, it hasn't come back. It will tell you that it's likely going to, but you can clearly take the long trade up, especially with this kind of bottoming event. Look what happens here. 2 days down, quits heading lower, never actually gets into resistance. It actually makes a new lower low at the 50. I'm going to make sure we look at price versus the actual plotted line. Up into the 50, and then we rotate right back over. Notice what this tells us. I have a high, a low, a lower high, a lower low, a lower high. That's telegraphing a lower low, right? This spends, what is that? Almost a month underneath the 50. Look what happens here. Comes to a low. Here's prior support. That's 41,968. So it comes in and tests that zone. So the first thing it needs to do is close above it, pull back, holding a higher low. There's your entry point. Now, you could have been aggressive and chosen 42,643, or you could have just bought the open as it recovered off of this space because, why? Getting back to the 50 is all the market cares about. It wants to stay above the 50. Happy land above the 50. Below the 50, not so much. Take a look at what happened. 1 day underneath. Fails to hold lower, though it wicked lower yesterday. Fails to hold lower, and then it needs to head up into resistance. Where is resistance? It could be the top of this candlestick, which all the other trades are inside of this candlestick, so I believe that that's the candle to watch, but we can also look at this one. So what does that mean? It means as long as we can breach 43,874, we're going to go up after 44,000 and then 44,200 and then 44,400. What if we can't? Like something like this, right? What if we can't? Well, we'll pull back, and as long as we can hold the open or close of yesterday, and that number's 43,748, we'll have a buy zone there. If it doesn't, step aside, because it can certainly move further to the south. No doubt about it. Absolutely no doubt about it. Okay? Let's take a look at the RTY very quickly. Oh, wait, what's the open of this year here before we move? Is that Jan? Yes. It's the high, 43,250. Yeah, this whole range feels potentially like a future test. And this moving average down here is the 200. All right, let's take a look at the RTY. I know we don't normally look there, but emerging markets, not emerging markets, small caps. Small caps went negative, right? That's what do we think about that? Well, small caps are always more likely to underperform, but look at what's happened here. Broke the 50, tried to hold the 50, couldn't get to the 50, went to the 200, bounced up to the 50, right? This is a ping pong event. It happens very often between the 50 and the 200. And guess what we did a few days ago? We lost the 200. So any bounces are still going to be sell zones. No doubt about it. No doubt about it. So just a side note, small caps in all kinds of trouble. All right, let's take a look at micro Bitcoin. Now, I tweeted yesterday, hey, listen, the crypto sell-off is just beginning. So I'm not trying to be a crypto hater. This is a great instrument to trade. I feel sad that it's rotating over because, particularly a couple of my sons are really invested in it. One of them just way too much in my mind. But what are we looking at? This 85,000, everybody was looking at it. We bounced off the zone. Look at how far we are under the 50, right? Tried. Listen, that is almost a month of trading in that area, and then it completely gaps down. This is the next leg lower. So any bounces, particularly into the 94, 95 area, should be a sell zone. Where's it headed? 80? 73? 68. It's probably going to try and bounce off this 200. 73 to 76, something like that. But bounces or sells here, no doubt about it. If it gets up over 88, 89, wait for it to bounce into resistance before taking the short. And if you want to go long, go to a tight time frame that's telling you you've got traction. I don't see anything unless it's like a 5-minute, and it still looks like garbage, right? Could you buy the low? Sure, that's around 88. 88.4, 88,400, and you could try that up into the zone. I do not like this price pattern at all. All right, let's go to oil. Sorry about the sniffles, folks. I really riding the struggle bus a couple of days. Well, to be honest, more than a couple of days, but all good. All good. All right, here we are. Big mess. I said, hey, listen, bounces or sells. Look at the 50. It started moving up. Look at the 200, right? The 50's below the 200. That's really bearish. But what's happening is this pervasive bid underneath is trying to hold. Is it going to? I have no idea, but I can tell you this. If I came into that simple moving average, that 50, and I tried for days and days to hold above it, and I make lower highs going into it, I'm in a selling formation, right? Now, what's prior support? In the recent times, it's 68.42. Now, I believe 68 is a pretty good bounce zone. It's certainly moving above it, but we have to get above the close, and that's $69.12, $69.12. Let's draw Fibonacci. 70 is the zone to watch. I don't think we're going to get there, right? We have the EIA report today. Let's turn this to the downside. Oh, geez, it doesn't have a reverse. Well, it's kind of a crud signal event. All right, I have to redraw it. Hang on. Let's hope I remember the way to do that. Yep, there we go. 71.25 high. 70 the number to watch. If we lose 68, 68, 67.39, and then 67 or 66.90. That's what we're looking at next. Peter Brandt said we could get the 40 here, which would be bad. Why? Because we want producers to keep producing oil, and they're not going to do it if it doesn't pay them. Right? Okay, let's take a look at this very interesting chart. This is gold. Gold's been in a bit of a topping formation. We just saw something that said, gold purchases are down. This is also a very big extension. And look at how many days this is what tells you you've got problems to the upside. Look at how many days we cannot close above that area. Now, if we close above the area, we've got ourselves some very interesting price action. If we don't, we're headed lower. Here's the 50. It's very far away, but man, I would love it if it came down into 27.50, 27.40. That would be fantastic, right? I would love that. That would be a great buy zone. Here, the traders are still going to try and buy the dip. And so as long as we come into 28.95 and hold it, we're going to be in good shape. If you're staring down the daily chart and you're saying, all right, well, what are my buy zone parameters here? Oh, for heaven's sakes. My buy zone parameters here, 29.33. If I can stay above that area, notice I peaked above it, couldn't hold. Why? Look at all the resistance to the left. I think this is a sell the bounce environment. But because we have so much bullish momentum, we need to wait for a bigger bounce. 29.40, that's where it stalled out the last time. 29.50, and then the short from there. Use micro futures with this one. It could get a little weird, so you just want to be careful there. All right, let's take a look at SPY. I feel like I've been recording for 3 hours. Okay, so have a look. What's going on? Large range-bound pattern breaks the 50. Now let's look at the behavior. 2 days below, gaps down, and then closes at or above the 50. The following day, dips become buys. All right? Now, let's see where... Is this the open of the year? No, 20, 23, this one. All right, look at the high. Yeah, kind of a big deal, this daily opening candlestick on the year. It's pretty bizarre, but the algos look at it very often. So we are in pretty much an area where a lot of people are going to try and defend it. Okay, and it could go all the way to 580 and still bounce. It could fill the gap. We know how gaps have a tendency to fill. So what do I suspect? Well, see the buying wick, right? What are they trying to do? They're trying to get above the 50. That's at the 600 area. So let's draw a candlestick formation. Excuse me. Let's draw Fibonacci off the candlestick formation and realize this. If we come into 590 again today and we don't hold it, we're going to fill this gap down here at 584. So what's the storyboard? Bounces or sell zones. Let's see where we are during the day this morning. It's already started trading. This is a 15-minute chart. Look at where we're at. 597. Here's the 200. Here's the 50. Slow grind to the north. Dips or buys. Dips or buys today because they want to get above that daily 50 moving average. Absolutely. Pullbacks or buy zones. 593 to 594, ideal. And then, there we go up into 602. All right, the Qs. See, the pervasive grind to the north. Just look at how the ATRs of these candlestick formations has fallen right off a cliff. It's because nobody's super excited. They're like, all right, let's tiptoe up here. Let's see how it goes. We're not going to push price too hard. We're not going to make people too uncomfortable. We just want to go nice and slow and walk it up. All right? So how does that look? Clear the drawing set here. You know, I've used this Thinkorswim platform for 25 years. That's a long time to use a platform. All right, what are we supposed to do here? We do not want to break the low. That's 513. If we break the low, we're very likely to head to the bottom of the wick. And if we head to the bottom of the wick, look at that. That's almost a gap fill right there. Very interesting. Almost a gap fill. Super interesting. Okay, so yeah. Okay, first of the year, candlestick formation, 516. And let's see where we are on the hourly formations. We know dips are trying to be bought. Look what our measurements give us. There's our 516. We're holding that. Old resistance, new support. My thought is I would like to go to the point of control before I go long, but it might not give me a shot to do that, right? How do you trade your hourly candlesticks, which I believe are incredibly powerful? You go, look at your current candle, go 2 candles back, and you go, all right, if I can come in and test that congested support, 516, my stop would be, so the entry would be 516.80, my stop would be 516 even, and then my target up to 518, 519. All right? Listen, that's it for me. I'll see you on the screens. You know, we have our Zoom meeting for members of the Benzinga Pro platform. And hey, listen, good luck. Good luck. Light and tight. All right? Take care.